In a surprise breakthrough, the United States and China have agreed to drastically roll back tariffs on each other's goods for an initial 90-day period. The news has buoyed global markets and caught many off guard. After a weekend of marathon, closed-door trade negotiations in Geneva, the US and China issued a joint statement on Monday. According to the statement, the US will temporarily lower tariffs on Chinese goods from a staggering 145% down to 30%. China will cut its own duties on American imports from 125% to just 10%. These were the first formal talks since US President Donald Trump escalated the trade war with steep tariffs.
Reached an agreement on a 90-day pause and substantially moved down the tariff levels. Both sides on the reciprocal tariffs will move their tariffs down 115%. We had very robust discussions. Both sides showed a great respect. We've identified 5 or 6 strategic industries and supply chain vulnerabilities, and we will continue moving toward U.S. independence or reliable supplies from allies on those. But the consensus from both delegations this weekend is neither side wants a decoupling. And what had occurred with these very high tariffs, as Ambassador Greer said, was the equivalent of an embargo, and neither side wants that. We do want trade. We want more balanced trade.
The talks were led by Chinese Vice Premier Lifeng, US Treasury Secretary Scott Bessent, and US Trade Representative Jamieson Greer. They also agreed to create a formal mechanism for continued discussions on trade and economic ties. The joint statement read, "These discussions may be conducted alternately in China and the United States or a third country upon agreement of the parties." It also noted that working-level consultations would take place as needed. The Chinese vice premier said that the talks were in-depth and candid. In the lead-up to the talks, President Trump had hinted at tariff cuts. Earlier in a Truth Social post, he said it was up to Scott B, referring to Bessent, and indicated a willingness to bring down the 145% rate to 80%. But the final deal went even further. This suggests that the US may have blinked first. The urgency from Washington had clear economic roots. The high tariffs had triggered a sharp rise in prices at American ports and stores. Retailers like Walmart and Target warned of empty shelves. Air freight handlers and port operators saw major drops in Chinese imports. Goldman Sachs had warned last week that inflation could double to 4% by year-end due to the tariff war. But China wasn't untouched. Its factory activity had contracted at the fastest pace in 16 months as of April. Yet Beijing appeared better prepared to weather the storm. President Xi Jinping isn't facing elections. There's little internal pushback, and China is already rolling out a fiscal and monetary stimulus package. According to experts, this gives China more room to maneuver. In contrast, the United States is running low on options. Its fiscal firepower is limited, with the only lever being an extension of Trump-era corporate tax breaks. A looming confrontation with the US Federal Reserve over interest rate cuts also complicates things. US Federal Chair Jerome Powell has made it clear that rate cuts are unlikely anytime soon. So who won this round? According to Martin Wolf, who's the chief economics commentator at the Financial Times, the Americans will have to be much cleverer than they have been so far. China has tremendous room for maneuver. America is politically fragile. The economy looks somewhat fragile now. The markets look fragile. This trade war is going to damage American business very, very considerably. Both sides have agreed to keep talking, but the 90-day window is ticking. And while this breakthrough has eased global anxiety, the deeper issues remain unresolved. Will this agreement last? For more details and updates on the newly brokered US-China trade talks, stay tuned to the official YouTube